decentralized NASDAQ at the speed of light.
With the President Trump and the First Lady Melania issuing their own meme coins.
Something like between 20,000 and 50,000 a day meme coins that get launched.
If I want to do my meme coin, how I make it viral? Resilience of the US economy is on its capital market. Good morning, everyone, for the next episode of our podcast. Today we have a very special guest, the president of the Solana Foundation, Lily. She came all the way from Switzerland for the big event they're hosting in Kazakhstan and agreed to be part of this podcast. Welcome to Kazakhstan. Welcome to AIFC.
Thank you so much for having me here.
Yes, I think that for our audience, we would do a bit of an introduction on what is Solana and what is the Solana Foundation, if I may ask you.
Yeah, absolutely. So Solana is a high-performance blockchain. Solana was started in 2018, came to mainnet in 2020, and so it's been operating on mainnet for about 5 years now. And the original pitch for Solana, one of the founders who designed Solana, his name is Anatoly Yakovenko. His original pitch is that this is decentralized NASDAQ at the speed of light. And so the vision from the very beginning is that this blockchain would function as global financial markets infrastructure. And at the time, there's a lot of discussion around how to scale blockchains. At that time, what had happened in sort of the evolution of blockchain as an industry and as a set of technologies is people had started to see the promise of programmable blockchains, which Ethereum really kicked off and started. But then in 2017 and 2018, there was a lot of excitement and usage of Ethereum to a point where the chain couldn't handle it. So then there were many different projects that thought, okay, well, maybe there's a different way that we can architect these blockchains to better be able to support the types of transactions and this whole idea of programmable money, but in a way that can really be scalable if you actually want to build something that 1 billion people can use or 2 billion people can use, really at internet scale. So that is where Solana started off and came up with this somewhat heretical idea that you would just have one blockchain. Instead of having multiple shards, instead of having multiple rollups and layer 2s and layer 3s, which is the architecture that pretty much every other chain has adopted up until now, you would just have a single shard. And everyone thought that's ridiculous, that's impossible, will never happen. And if it does happen, it's certainly not going to be decentralized and permissionless. Well, Solana did it, and here we are 5 years later, and Solana is now the most used blockchain. Yeah. So between 70 and 90% of all transactions in all of blockchain happen on Solana every day, and Solana also accounts for about 90% of all block space.
Yeah, exactly. I think that this is like one of the fastest growing platforms, right? Especially in the financial industry. And that's that's why we're interested as a financial center, right? Just before, again, going into the more details, a little bit on this innovation that Solana had, as I know, is a proof of history, right?
Yes.
The concept of proof of history. Maybe we can a little bit elaborate, because I think that is the kind of idea that makes this platform fast. I mean, the blockchain fast, right?
Yep. Yeah. So at the core of it is this idea that you have parallel execution rather than sequential execution. And so you can have multiple sort of processing of different transactions all at the same time, whereas classically within Ethereum, it's one transaction after the other. And so that gives you higher bandwidth, you could say. Instead of a single lane highway, you're on a multi-lane freeway. And that is what enables the speed and the performance of Solana. Many other things as well, but that was one of the core innovations and one of the core abilities of Solana to be truly decentralized, yet also high performance. And that there's been multiple upgrades up until today, and the core protocol is always evolving, always changing. So that is something which is different between Bitcoin and everyone after Bitcoin. In my mind, how do Bitcoin, Solana, and various other blockchains kind of fit together? To me, I think it's quite simple. I think that in blockchain, there's always been the asset use cases and then the infrastructure use cases. So in the case of Bitcoin, the asset is the infrastructure is the asset, and today everyone sort of understands that as a store of value and as digital gold. And part of the value of Bitcoin is that the core protocol doesn't really change. So it's very stable. And so you always know that it's store of value, reliable, the same as it was, more or less the same as it was 15 years ago as now. And there's been a couple of changes, for example, the introduction of SegWit a number of years ago, but really not a ton of change. And I remember that being a big part of the debate back in 2016 so I got into Bitcoin about 2013, so over 10 years ago. And I remember in 2016, there was this whole debate as to should we scale block sizes from 1 megabytes to 2 megabytes? And there were basically two wings of the community, and one that said, no, we should not change it. It doesn't need to be more performant. It doesn't need to be faster. And it doesn't really need to change because it's a store of value. And then that was largely the miners. And those were the folks that were looking at Bitcoin as commodity store of value and sound money. And then there was the other side of the industry that was very focused on blockchain as a technology platform. And no surprise, the people who primarily had that perspective were the people who are building applications on top of blockchain. Because naturally they're software engineers, they're technologists with a strong background in Silicon Valley and tend to see things as software platforms and as technology platforms that obviously should have a roadmap and should obviously improve over time. So I think that was the beginning of this divergence between the asset, which is Bitcoin, and then who is going to be that technology platform. So at that time, they basically decided that Bitcoin was not going to be that technology platform. And maybe one day there will be more scale, the Lightning Network, various payments networks related to Bitcoin, but there is not going to be a technology platform in the foreseeable future native to Bitcoin that has all of the other things that we've now become used to and understand can be very powerful. So native smart contracts, right? So parallel transaction processing, high performance in a decentralized network such that this decentralized network, when you use it, it feels just like using the internet, right? The performance is within seconds. And so for your average consumer, it just feels like another day using mobile app, another day using your browser. So there's the asset use cases, and then the question has always been, who is going to be that global financial markets infrastructure? And really financial rails. And why is that important? Well, that's important because we don't actually have money and a financial system which is native to the internet and something that is equally accessible to anyone with an internet connection. And we saw how powerful that was with content on the internet. Now anyone who can get access to the internet, which is 85% of the world population, so about 5.5 billion people, you have more or less equal access to any and all of the content on the internet. And the question has been, well, why don't we have a financial system which is as equal access, as penetrated as information on the internet? And part of the reason is because you didn't have ways to protect the integrity of money digitally, natively on the internet. With blockchain, you do, right? Because blockchain, you have this ledger and you can prove who owned what and when. So you're not going to have this kind of double spending problem, which in a way you have with information on the internet, where if you have a photo, for example, so virality, we're all very familiar with that on the internet. You want things to go viral, right? Yep. And this idea that you could have a meme, a video, content that can suddenly get 1 million or tens of millions of views. And that is fantastic for certain types of information on the internet. But that ability to replicate virally is really bad for other types of information on the internet. And the thing that it's the worst for would be for things that you want to preserve value for. So you cannot go take $1 and then, scale that to have that same dollar be spent by 1 million people, because then obviously it's not worth $1 anymore. And so you have to, in some ways, be able to preserve the value of certain types of data on the internet. And we couldn't do that until you had blockchain. So that is I think one of the main contributions of blockchain, the ability to preserve value in a digitally native environment. And so with that innovation, you can actually have global financial markets potentially, right? And I think now we're maybe 15 years into this journey from the advent of Bitcoin. Let's see, actually 17 years. And I think that there's still quite a lot of building and quite a lot of innovation ahead of us. Yeah. But that's been the vision. So Bitcoin as digital gold, and the question is who is going to be global financial markets infrastructure. And my perspective is that that's going to be Solana.
This is a good point, right? Despite this, all the skepticism, let's say, about the cryptocurrencies and then the technology itself, right? At some moment, we saw the turning point when classic traditional financial institutions actually understanding that this is the technology of the future and adopting it, and especially as you said, the access to actually financial instruments, the, let's say, democratization of this access, right? Came when the big houses, investment houses started tokenizing their classic maybe funds. One of the examples was the BlackRock tokenizing its money market fund, right? But again, this is not like throughout the industry, let's say. So what are these big traditional houses' approach to tokenization? I'm sure you work with them a lot, right? So
yes.
How do they view, what is they believe is the value in blockchain that it can bring and improve their business models?
Yeah, we do work with BlackRock, with Franklin Templeton, with Fidelity, so a number of these extremely large asset managers who are top-notch, classic names, incredible partners to work with, and a huge bunch of assets behind them. They might start off with a money market fund such as BUIDL for BlackRock, but once you can do a money market fund, once you can do BUIDL, then you can do the tokenization process is very similar for any range of private funds after that. So I think the money market funds that we're seeing right now are really just beginning. So I think the value proposition of blockchain to, for example, a BlackRock, for example, in traditional finance more broadly, is in this case, they're issuing an asset. And for them, the business model is very straightforward. They take a management fee, let's call that 25 bips or 50 bips. And so if they can expand the distribution of that asset or increase the utility of that asset, then they build AUM for that asset and can make more money from that. And the value proposition of why crypto and why now and why public blockchains, because in the past there's been a lot of skepticism about public blockchains, yes, and a strong desire to have private blockchains is, well, if you want to get broader distribution for your asset, then you have to distribute that asset where there are users and where there's an existing capital base. And that existing capital base and that existing user base is on public blockchains. They're not in segregated private networks of which there could be many. So the value proposition of being on a public blockchain to me is really about unified liquidity, right? If this is about financial markets, the most powerful feature of financial markets is to have liquidity.
Liquidity,
yes,
exactly.
That is the most important thing. And the number one feature of these blockchain markets is that they have the potential to leverage the liquidity of up to 5.5 billion people. The wealth and the potential asset base of 5.5 billion people is much larger than what we consider to be the asset base of traditional finance today. And so therefore, the total market size of what tokenized assets can be in the future is going to be larger than the roughly $100 trillion of assets that comprise the traditional finance industry today. So so let me talk through a couple of things that I think are really interesting about that. Right now, the BlackRocks and Fidelities, they're issuers of assets, and they want to get broader distribution of their assets. And so this is on the issuer side. So I think that crypto and beyond that, like new technologies are always about revealing a long tail of supply and demand. And so in this case, it is supply and demand for capital markets. And there's been a lot of talk over the last, since Bitcoin came around, on a lot on the buy side, the demand side. So this idea that people talked about it different ways, financial inclusion and the ability for people in, for example, non-Western markets to have access to a much broader range of financial products. Yep. And that's all true. We could talk about that one at length, and we should talk about that one at length. The other part that is less talked about is on the sell side or the issuer side, the supply side. And that's obviously very important as the other side of capital markets. It's all about the demand side and also the supply side.
Who can get access to finance, right? I mean,
capital formation.
Yeah,
that's right.
Yes.
And so there's the capital distribution side, but there's also the capital formation side. And maybe this is one of the reasons why $100 trillion of financial assets in the traditional finance system is actually quite small compared to what the total amount of human-generated wealth should be, right? And there's only a portion of that has been captured by the existing financial system. So what I think that means on the issuer side is that could be anywhere from small, medium businesses that just are in mature capital markets but don't have access to public liquidity. So we talk about that a lot in, for example, the U.S., where the IPO pipeline is very, very narrow and it's extremely expensive to IPO. So very few companies can actually go through the traditional IPO path, which is why you see in the U.S. market, for example, a lot of folks going for SPACs. And we saw that in 2019, 2020, a huge kind of like SPAC, a huge SPAC boom. And some of that's coming back right now as well, because the demand to get access to public markets is very large. And that's even in the most
sophisticated, right?
Yeah.
The demand is unmet. I mean, it's unsatisfied.
Yes, absolutely. Demand is unmet. And that's even the most sophisticated market in the world. So there's unmet demand on both the on the buy side and also the sell side of capital markets. And I think that with crypto, so crypto's inherently 24/7, 365, it's on. Whenever the internet is on, the markets are open. And that can become very powerful when you marry that up with tokenization, and I think where tokenization is headed. Because yes, today we're going to be tokenizing products one for one, skeuomorphic, taking something that already exists in the traditional world at scale, and we're going to represent that one for one on chain. That's a good start. And then what's going to happen next is people are going to take other fund products that have a little bit more risk to them, a little bit more structuring behind them. They're going to tokenize that as well. And once that comes online, then I think the next thing that's going to happen is people are going to start issuing real world assets that do not exist in the existing financial world. And so that can become relevant for a place like Kazakhstan, because in Kazakhstan, you have incredible commodities industry. And that could be something where Kazakhstan companies can directly issue, whether it's corporate equity or even a tokenized form of the product of the commodities industry, the commodity itself, and have that essentially direct list on public markets, which is the blockchain.
Yeah, that's why I'm really fascinated and have huge belief in tokenization and blockchain. Being myself the former CEO of the local exchange, new one, right? Liquidity is the huge challenge, and exactly the issuer side having access, and also the buy side or the clients having access to the securities. This is the problem that all the exchanges, especially emerging, trying to resolve, and it's hard, right? So exactly, tokenization, I think, would be the technology that leapfrogs us from a non-developed capital market to the very liquid one, right? We have experienced that in personal banking. So we as a country from cash straight away went to almost like card and then QR payments, non-cash, right?
Yes.
We never had checkbooks and everything that in the middle that existed on the Western markets. But now we're one of the largest cashless economies. So maybe, and it probably same about the China with the WeChat Pay and etc. with Alipay, right? So this is, again, technologies can change things very fast. However, with all the benefits, still, it is not widely accepted, right? The tokenization and use of the blockchain. So what do you think are the top 3 factors that kind of stopping the traditional huge financial industry from all just in a moment moving to blockchain?
Well, I think it's accelerating.
It's
quite
definitely,
a bit.
In a moment it could happen, if maybe.
I think that now 25, 26, I've been doing this for 10 years now. And so this is really the third cycle of large institutions wanting to get into blockchain. The first time around in 2015, it was called private blockchain. And then in 2019, people called it securitization. And now this cycle, people call it RWA. And each time there's more maturity in the underlying technology and also more appetite from institutions and also more value proposition from the blockchain industry itself. There's more distribution, there's more users, there's more sophisticated developers, there's more sophisticated crypto native infrastructure, which is not just the blockchain itself, but also custodians, also tokenization platforms. So it's really come a long way. And also what has to happen is the regulatory environment has to permit that. The infrastructure can be there, but if the regulator says, I'm going to not give out any licenses, or even worse, I'm going to try to suppress the growth of this industry, then of course that will be very challenging for large institutions to participate. So many of those things have emerged gradually over time, and then some of those things just really flipped about 6 months ago. And so that is where these large companies in the U.S., which just have they inherently have a global leadership role. If they're able to do it, then I think that's going to bring momentum to the industry around the globe. And I think going back to your earlier question, one of the reasons why blockchain can also bring value to these assets is not just increasing distribution, but it's also adding utility around the asset. So even if you can own a money market fund today, let's say you can own Apple stock. I can own Apple stock. I can buy it very easily. But what I cannot do is I cannot immediately collateralize my Apple stock and borrow against it. So the collateral value of all of these real world assets in the traditional financial system is basically none. And so that is one reason why even myself, as someone who has access to all the brokerage accounts, can buy any US security, why I still might prefer to buy it on chain, because then I could buy, call it $1,000 of Apple stock, and I could immediately collateralize it and borrow $2,000 against it if I wanted to. And that's something I cannot do through any of the traditional portals today. So that's very powerful, on top of which I could also trade it 24/7. And that is also instantly better than the existing brokerage accounts that people traditionally access. So it's about broadening distribution. It's also about broadening utility of those assets. And if you can broaden the utility of those assets, then in a way in a second order way, indirectly, you've increased the value of those assets as well to the holder.
Yeah, of course, you don't have this discount on the illiquidity, right? So you're kind of, as you said, this is going to have a mutual benefit effect on everyone.
Yep.
And I guess this is the concept exactly of internet capital market,
yes.
right? With the 24/7 accessibility and accessibility despite wherever you are, right? So we can today use or have access to content everywhere in the world, sitting again in very remote part from that place. Same, we hope. All of us are working on that. This will be the possibility on the capital markets in the future as well, right? And one key thing you mentioned is the regulation. I think this is one of the fundamental factors, right, that kind of affecting this industry. And I don't want to brag, but of course at AIFC we try to stay on the forefront of this regulation, right?
That's right. That's why we're here. That's why we're here.
Yeah. Okay. Leaving us aside, who would you say what's in the landscape is happening? Which jurisdictions are the I would say most, but are very open and adapting and flexible in these terms? If you can share your thoughts.
It's really a minority around the world, I'm going to be honest. And so I live in Switzerland. Switzerland is certainly one. Certainly the UAE has been very blockchain forward, and I think has helped move the ball forward for blockchain around the world. Historically, Singapore has also been quite blockchain favorable. Hong Kong has also been quite blockchain favorable. And it's not an accident, I think, that all of these folks that are leaning into blockchain are usually smaller countries, smaller jurisdictions, and already have a reputation as being a financial center and an innovation center within their region. So I think that's not by accident.
I'm not a regulator myself, so I can't ask this question. What is the expectation from these jurisdictions? Where should they strategically target to be, or you expect from regulators, open regulators, or the most forward-looking regulators to adopt? What would you like to see from them, from us?
I think that allowing clarity as to what these tokens are and what these tokens are allowed to do, right? I think that historically in the U.S., largest market, very influential, there has been a desire to ensure that tokens are never considered securities. They're only commodities, or even more than that, just worth nothing. And that's where the meme coin extravaganza came from. But I don't think that if we really have the vision that the whole range of financial assets should be tokenized and represented on chain, then of course there's a wide range of financial assets that are going to have fiduciary responsibilities around them, are going to have governance requirements around them, are going to have a tie-in to revenue sources, and are going to represent a revenue stream. And so I think that having, I guess in the US we call this market structure, but having clarity around what the different token types are and what the rules are around different token types, and being permissive about that huge swath, which is things that have governance rights and things that in particular have a tie into revenue streams, I think that's going to be very important. That's one in terms of market definition and market structure. And then I think that there's also enabling the infrastructure around cryptocurrency. So there needs to be, in order to have large-scale institutional adoption, you have to have trusted custodians. You've got to have trusted banking partners and on and off ramps. And there needs to be clarity around that, and erring on the side of permissiveness and erring on the side of, how can we make this happen, rather than looking at crypto. And I think historically many people have looked at crypto and thought this is laundering drug money, and so it starts off as being inherently a suspect and bad thing. Yeah,
exactly. That's the problem, right? But still, most of the probable illegal activity actually happens in cash, because you cannot trace really cash, right? And then blockchain is very different. Yeah, that's our vision. Exactly what you said is that the regulation. Good regulation is not about loose regulation or having no rules. It's actually having clarity, transparency regarding the rules, right? So that all the participants actually understand. Another thing you mentioned is meme coins. I think this is the big thing. So, apart from large institutions in traditional finance, adopting tokenization and etc., meme coins with the virality being part of this internet, right, thing, I think this is also important to mention. And I don't know if you call them still meme coin, but with the President Trump and First Lady Melania issuing their own meme coins and being a huge success. What do you think? This is the bad thing, or it's a good for marketing of tokenization? What's your view on these meme coins?
I think meme coins are one type of asset. So we think about the asset spectrum as really being a huge spectrum of different assets, in the same way that you have a whole spectrum of content on the internet. And on the internet, you have some content which is accepted by everyone. Really great news articles, very good video content. But there's also a lot of content on the internet that people think is garbage and people think is very controversial. And so in the spectrum of assets, you're also going to have a very wide range of assets. Most of the meme coins out there are not lasting. Something like between 20,000 and 50,000 a day meme coins that get launched, and most of those go away, right? So that's going to be on one end of the spectrum, and then on the other end of the spectrum of assets, you're going to have things like a money market fund, which is an asset that many people are happy to hold and want to hold. So I think that one way to characterize this asset spectrum is price versus value. On one end of the spectrum, you have assets like meme coins that have mostly price or entirely price, but no value. Right. They say there's no value. There's a disclaimer, it's worth nothing, and yet it can command price. It's deeply confusing to most people because most people think about money as having value which is external to them.
Value, basically, right?
Like they're atomistic takers of whatever that price is, and they equate price to value. Whereas in crypto, those things are very divorced, which I think is why crypto is confusing to a number of people, because usually you think price is value and value is price, and we all grew up thinking that humans are both rational and markets are also efficient, neither of which are true.
That's true.
And so on one end of the spectrum, you've got assets that are all price and no value. And then on the other end of the spectrum, you have assets that are a lot of value but no price. And that would be my characterization of a lot of the tokenization efforts and private blockchain real-world assets that have been tokenized to this day. They're largely sitting in private networks where there's no liquidity. So they have value because maybe it's a home mortgage. So obviously that home mortgage has a revenue stream. There's value there, but it cannot trade. There's no other market participants. There's no counterparties, and there's no liquidity around it. So you don't really have price discovery. So that's the spectrum today. So the critiques of the meme coins is valid, totally understand. How can 50,000 is crazy. How can 50,000 be launched a day?
It is. I mean,
and all this money changing hands, and there's no value. It doesn't make any sense, and it's not sustainable. On the other hand, if you have these assets which are being issued in these private networks that if a tree falls in the forest, nobody hears it. What do you say about that? So what we need to do as blockchain is accept, in my opinion, that this whole range of assets is going to exist. In the same way, we now accept that on the internet, there's a whole range of content, and then that content gets filtered by the application, and it's filtered by the application and thereby by the user. And in that way, there's sort of an indirect market for content. There's going to be that indirect market that gets expressed for assets. And that's the way it should get filtered.
Yeah, still they exist. They from time to time are popular, right? So what is the secret we would share? Like if I want to do my meme coin, how I make it viral? Any special sauce there?
There are definitely experts on that in this industry. Okay. I might not be one of them. So are you going to do the AIFC meme coin?
We're actually thinking, we wouldn't call it a meme coin, right? But we thought about actually doing AIFC token because we have services, we have certain like brand value and etc. We have a kind of ecosystem, right? So this is the idea we're like exploring, right? Yeah. Again, going back to the bigger things. Okay. I think this is also a good point. I think Kazakhstan has a lot of assets that have value. They just don't have a proper pricing, right? And don't have access to proper capital, whether this is like real assets in terms of subsoil, mines, commodities, including the agriculture commodities.
Yes.
Second, also talent, right? So I think we have really like a big talent pool. I don't know if you know Dimash Kudaibergen, the world famous Kazakh singer. He's one of the talents that could make it to the international arena. And again, I think that the tokenization can really like be a tool to attract capital here. And I've met already a few founders who use Solana for their like projects in commodity trading and other things. So I value myself like the opportunity as very high. What do you think like the areas of the economic industries that in Kazakhstan could be the fastest adapters of tokenization tokens?
Yeah, so I think that talent formation, capital formation are parallel tracks, and they're somewhat different things. They are related because ultimately in order to build an economy, you need to have talent formation and capital formation in the same place, because then those two things also feed upon one another, which is why Silicon Valley in California is so tremendous and has this incredible network effect, because they do talent formation very well. Yeah. And they also do capital formation extremely well. And they do both of those better than really anywhere else. And that becomes a self-reinforcing cycle. So I think you do need to have both. But then the the way you go about these two things, there are different skill sets, there are different people, and different careers, and then these kind of two parts in the ecosystem support one another. So the talent formation side is around, typically in the software world, it's around developer talent first and foremost. And in other industries, it might be around a different type of talent, right? In New York, for example, there's a lot of talent formation around bankers and the finance industry. And in other parts of the world, New York also has talent formation around musicians, right, and artists,
yeah.
right? And in a way, those things also support one another because the financial industry ends up supporting the arts. So talent formation is not only specific to software development. You have these kind of talent hubs for all different types of skill sets around the world. You have, Paris, for example. Paris, London, and Moscow are where ballerinas go get trained, and everyone knows that. So this is not specific only to software development. Yeah. But whatever that kind of desired skill set is, you have to find a way to encourage talent formation, talent density. And I do believe there's an activation energy for a talent for any ecosystem. So that's one. And then on the other hand, you need to also reach critical mass around capital formation and capital density and the ability to actually, start companies, raise money for those companies, produce a product, be able to find a market for that product, and then get that whole ball rolling. And so I think that they are two different tracks. Call it the devs and then the finance people. And so I think the potential for Kazakhstan to accelerate both of those things is unique right now. Mm-hmm. And there aren't that many places that have both, let's call it the talent side and also the capital side, and can reach critical mass in both around the same time as well. This is something that the U.S. is really good at, and really good at, but not everywhere in the U.S. It's really good at that in New York, really good at that in San Francisco, and even with all of the problems around California and San Francisco, it still wins every single time. They've tried to replicate that in, for example, Austin. They've tried to replicate that in Portland, the whole tech community, and still no one really does it as well as California. And so it's something that is really hard to get right, but then it's getting both of these things at the same time. And I think that other markets that really understand how to do this is also obviously China, right? China is the only other market, and it helps that it's so large, but can really do talent formation. Universities being able to train a large number of young people in relevant skill sets, and then productively put those skill sets to use, and then also on the capital formation side, and those two things reinforce one another. I think you also see that in smaller East Asian economies. So certainly South Korea has done that. Taiwan, some places in Southeast Asia as well. So that is, and that's also the way we think about it within Solana as well. So within Solana, which you could say is sort of this distributed internet community, we've thought about it as well. Capital formation, talent formation, capital formation, and how to get that viral loop going. Yeah,
like fully on page with you here, like with the talent and capital, and again, the thesis that you're saying that this is actually helps for the growth of the economy, right? Or just recently on last Davos, Larry Fink exactly said the same, right? Resilience of the U.S. economy is on its capital market that allows like entrepreneurs, pretty much any size of a business to attract capital to grow, right? So it can always adapt, while in many other economies, they are really relying on whether it's government money or it's fully banking industry that kind of does not help to diversify your funding source. I think this was a top of the iceberg, but very insightful discussion about what Solana does and your view on how it can help allocate capital better and basically develop the capital markets. Again, thanks for coming with AIFC. We're on the same page. Yes. But also my podcast is one topic I always try to cover is about the personal finance, right? This is like very important. We want to contribute to the elevating the financial literacy in the country. So if you can share a little bit of of your own experience, like it can be like, how did you learn about money, or maybe how you manage your funds now, or maybe how you teach your kids, or how should people teach their kids about personal finance? So if you can share some ideas about this.
Absolutely. I come from a family that it's always been very conservative when it comes to finances, and I'm very appreciative for that. So my family, Chinese immigrants to the U.S., and was always interested in investing for long-term outcomes and willing to take pain today in order to be able to compound financial returns over time so that we could invest in our family in ways like sending people to college, which is very expensive in the United States, right? We're saving money to be able to invest in life opportunities and skills. And that's something that seemed just very obvious to me when I was growing up, but now I understand was really a gift that my parents gave me to be quite conservative and very thoughtful about financial resource, because financial resource is the other side of really just your time, right? And all you really have, the ultimate resource you really have in life is your time, and you want to be able to trade that for it's almost like a battery of your time, right, is your financial wealth. And so if you see that as, a battery of your time, then I think that makes me at least think about money quite differently. And I also always thought about money as being a shared family resource. And so my mother gave me a family credit card at age 11. Which I was the only kid that had my mom's credit card at age 11.
That time is pretty early, right?
Oh, very early. And I knew a lot of friends that if they got their parents' credit card, they would go and be like, woohoo, like I get, it's like basically unlimited credit line for an 11-year-old. And I never would have done something like that because I saw it as this is trust, and I would never spend my family's money improperly because that is my money at the end of the day. So I think that money is a lot about, one thing I've learned in crypto is that money is in a way a social construct. It's, and we see that at the extremes with things like NFTs and meme coin trading at scale, where there's social community kind of values that get imbued in markets, and that's also very confusing for a number of people. But ultimately, using money and making financial decisions has a lot of culture imbued into it, and that is part of the way I've always seen it, which is that this is a battery for my time today, so that I can buy back my time later and have more option value over time. And I see it not just being a battery of my time, but also being a battery of my family's time and also intergenerationally. So I've always been very financially conservative.
Oh, wow, what a great answer. I mean, and again, culturally, we as also like Central Asia state can really relate to that. It's a shared family value, long-term benefit over a short-term joy. So I think it's a great answer. And I mean, I think a lot of people can in Kazakhstan also relate to that. Thanks.
Yeah.
When do you think we should start teaching our kids about the crypto?
I've already started teaching my kids about crypto.
At age of
when we can talk.
Where do I start with the crypto with my kids?
Well, what I tell my kids is they've seen kind of the Bitcoin symbol around at home. Oh, what is that? It's orange. It's kind of pretty. And there's some Bitcoin books at home. And so I started off talking about sound money. And also, it sort of helps that because I've traveled a lot, I have cash bills from many of the places that I've traveled. And, I have cash bills from Zimbabwe. I have cash bills from even Korea, where they've gone through a lot of inflation. Yeah. And so one of the core questions that they ask is, why is it that this one is one bill 50,000. Yep. This one bill is one, and this one I can't even count the zeros anymore. This one is 1 billion. Yeah. So why is that? It's a very obvious question, and then simple questions lead to complicated answers.
Yeah. Great. Yeah, exactly. That's I think the approach. Then you just explain that the money can take different forms, but in the end, it's money. Ultimately time, as you said, right? Well, thank you, Lily. I think our time is up. This was a really insightful discussion. Again, welcome to Kazakhstan.
Thank you so much.
Welcome to Astana. We hope to see you more often in AIFC. And again, I believe this is the start of a big journey for our cooperation.
Thank you so much for having me.
Thank you.
All right. Thanks.